Your view on this whole regulatory overhang now on China tech, do you think that this is just far from over at this point?
Well, it's hard to say, but new normal sounds quite reasonable to me. Clearly, there have been intents to increase the control somewhat from different angles. And I mean, if you imagine for a moment the U.S. government, if they had, a major tech company listing in China that is collecting a lot of data on the United States and where the major investors also happen to be Chinese, I guess it's not totally unreasonable to have sort of a degree of concern. And I've also been reading reports as well, just like you discussed a second ago, just like with Alibaba, actually, the Chinese government has been sort of trying to reach out to Didi before and suggest to reconsider that listing. So I don't think the fact that it was listing first and then it comes through is a particularly nefarious thing. But of course, the wider question is, what should one do from an investor's perspective? I would say, well, two things. One is diversify. It's the most boring thing to say, but it's actually often the most important thing you can do. Diversify across different vectors. I think there's still some catch-up room for value generally and globally, of course, as well. But I think one can't really ignore the Chinese market in purchasing power adjusted terms. It's the largest one actually since 2011 already, so for quite some time. And also, I think the economic figures are quite strong. World Bank is expecting 8.5%. Shadow banking has been reducing as part of the cleanup, and it's not totally unrelated maybe to tech. Generally, China has been using the economic strength to clean up a lot of things that probably should have been cleaned up a while ago.
I want to bring in the inflation story, because that, you get the inflation story right, you get value or growth right as well. And oil's a big story today. We're hitting multi-year highs on that. How does that change your outlook on inflation? And also back to your call, do you get more into value or do you look for the high growth companies this time now?
But generally speaking, briefly on inflation, I think it's still something that's vastly underestimated and probably the biggest risk that's out there that people are not quite paying attention to. And related to this is the fact that debt and deficits in the United States, as well as in a number of other countries in Europe, we are seeing it now, are so high that really a lot of central bankers are stuck between a rock and a hard place, which makes this really, much more dangerous and urgent than before. In the first 8 months of this fiscal year in the US, we have 2.06 trillion debt. CBOs projecting another 3 trillion for the whole year, on top of the 3.1 last year, which is around 15% budget deficit. As a reminder, the ECB common Eurozone area criteria was 3%. Now, of course, some of that is due to COVID, but we were running at 1 trillion before and had some warnings about inflation at that time. And I think it's going to be a global inflationary risk this time. Recently, when Chinese renminbi strengthened as a result of these fears on US dollar inflation, the Chinese government stepped in, increased foreign currency deposit rates for the first time in 12 years. China Development Bank issued bonds, US dollar bonds for the first time in 6. They allowed investment outflows. So no major country actually really likes their currency to appreciate too much against the dollar. And I think there's this risk of countries inflating all together. Another thing overlooked related to this is similar development in the Eurozone. You have Draghi, Lagarde, all pushing very, very hard to not reinstate the EMU criteria like they were before COVID.